which is good. Needed to make a lot of progress because we needed to make. We've got a lot. We've got a lot of progress to make, right?
I was going to say there's a lot of things. There's a lot of moving parts, isn't there? There's smart contracts. There's market making.
Oh,
There's James with the systems, and then they've all got to come together and talk to each other.
yeah. It's and yeah, and it's not entirely obvious what the next thing to do is. So yeah, it's a hell of a thing, and yeah, it's a hell of a thing.
Nice. Well, we got a nice full crowd today, so I'm hoping to see lots of chat coming through. Let's
Uh,
see, we're up to
Dude,
about
you
yeah.
should see some of the edges that James and James we got James and Underling a couple of months ago. A little
Mhm.
Ukrainian guy called Artem, and
Right.
he's fucking good. He got on a negotiating call with Howard, and Howard was doing his usual Howard thing. He said, "I think that kid would have paid us to work for him for a." And I came back. It's what are you paying him? I was like, oh, "Motherfucker, come on, give him an extra grand a month." And he's like, "Oh no, but he agreed to." It's like, give him an extra grand a month. He's a fucking Ukrainian refugee for fuck's sake. Like I know he's got a maths PhD, but like fucking just give him some money.
Help him
Uh,
out. A really good email this week was the one about slow trading versus fast trading to explain Goblin and liquidity and how liquidity works. That was a really informative email this week. So, pairing the skills that you and James have got as slow traders with what Liquidity Goblin can do every 15 seconds.
And
Wow.
and what's interesting is because we chat to James and I are chatting to Goblin all day, every day, right? Like, and he doesn't really have. He has very, very strong intuitions about markets. Like, he understands them probably better than me. Yeah, probably better than James and I. And but he doesn't understand anything outside of like 2 minutes into the future. Like he couldn't build a trend system. Like he wouldn't even know where to look for
Mm.
edges. But he understands markets really well from the perspective of he's worked for a bunch of big market makers and been a big market maker and been a high frequency trader, just seeing where the money is washing around in the extremely short term. How does it wash around? It's a very different and equally valid way to view markets. I'm really enjoying it actually.
Well, yeah, it's fascinating to learn more about it because Goblin doesn't lose because he can win. I know these numbers aren't correct. He can win a billion small trades
Well,
versus.
he had so what he does is you've seen that order book in. Let me share my screen. I'll show you how it works.
Hmm,
Uh, I'll show you guys how market making directional trading works compared to regular trading. So this is an order book. Let's load up Bitcoin. This, this will make more sense. Okay, so if we look at this, see how this is constantly changing. This is the amount of people willing to buy versus the amount of people being to sell and at what prices. So a market maker is in all of these. So there's 6 Bitcoins on the offer. That would a percentage of that would be Goblin right now. And a percentage of all of these numbers would be Goblin. So he's willing, if someone comes along and says, I'm willing to pay too much for Bitcoin, he's there to say, yeah, sure, you can pay too much. If someone drops the price down, he's willing to say, hey, I'd buy Bitcoin a bit cheaper. I'll
hmm.
sell it a bit expensive. I'll buy it a bit cheaper. He's doing that all day, every day, millions and millions and millions of times a day. And along the way of doing that, you accumulate exposures, right? If Bitcoin's too cheap, you're buying it and then you end up with some Bitcoin. So so what he does right now as a high frequency trader is he's trying to make as much money as he can without holding any inventory. But we're trying to hold inventory. We're trying to hold a certain amount of whatever we want to hold. We're going to hold a certain amount of Bitcoin, a certain amount of Ethereum, a certain amount of Solana, a certain amount of shitcoins. And we are constantly working out how much of that we want to hold. So when we take our FINREV systems and we bolt high frequency trading on the engine on the end, the high frequency trading engine works as it does, just buying and selling millions of times a day. Even if we want to buy some, we'll still be willing to sell it if someone wants to overpay for it, right? But we're trying to gradually accumulate the exposures that we want. So whereas Goblin would get out of his exposures when they get too big, he doesn't want to end up holding. He doesn't want to end up holding 5 Bitcoin. He just wants to clip the ticket for $20 and then get the fuck out. He wants to buy here and sell here. But
Mhm.
if we buy here and we want to hold it, like our hypertrend system says, oh, we want 15 Bitcoin right now, and we buy another four here, another four here, another four here until we get to 15, and then goes back to quoting each side just like Goblin does. So we're kind of like using the high frequency trading engine to get the exposures that we want. Now, the reason for doing that is a couple of reasons. Right now, we're paying tier zero, tier one fees, right? That's very expensive to trade in and out. He's at the top tier and we'll be at the top tier. So we get paid.
Mm.
So if we put a and right now we're entering on some maker fees, some taker fees. Maker fees are very expensive, taker fees are very cheap. Um, High frequency traders enter all on maker fees. They're market makers. That's what they're
Makers.
makers. And so the fees are much, much cheaper. Secondly, about probably 50% of your trades, you think, oh, well, what's the point of buying here and then selling here? Well, you just made 594 to 601. You just made $6. Like that's the point. Like what's the point of doing that? Like $4. Like it doesn't sound much, but you do
Mhm.
that a million, you do that a million times and you're getting somewhere. So this is the basic structural thing that it does. And what this does is it unlocks so much more for us because let me just jump into it and
Mm.
I'll explain how it works. So welcome, guys. I'm here to give you a bit of an update on the Hypertrain project. Sorry, I've been in a hotel in air conditioning for a couple of days. So it's powering from strength to strength. So let's talk about what's changed since last time we talked. So in plain English, what we're doing is we're bolting a high frequency trading engine onto the top of FINREV. And this lets us execute millions and millions of transactions a day to lower costs. But more than that, so right now we have a target weight, but trading is quite expensive for us now. So we don't. So as soon as our expo, so let's say we want $100,000 worth of Bitcoin in an account. If that drops down to be $90,000 worth of Bitcoin, we might be willing to let it ride within 90,000 to 110,000. And we'd only step in at this boundary, which we call a barrier system. This is the normal way that what we call slow frequency and slow frequency hedge funds trade at. So you set a boundary and you say, okay, it would be too expensive for us to trade when it goes up to here and then down to here and up to here. Why? Because what if it's just wiggling around the target band? We might buy a Bitcoin, sell a Bitcoin, buy a Bitcoin, sell a Bitcoin, and it's all like a bit wasteful around here. But because we no longer have trading costs or significant trading costs, we can maintain the exact exposures that we want. We don't have to wait till it gets down to here to buy, and we don't have to wait till it gets up to here to sell. And we can keep our exposures at what we want the whole time. Now, this sounds simple, but what it unlocks, it unlocks a whole pile of edges that we couldn't trade before because we weren't good enough. Like we had things that we knew were predictive of price, but when we tried to trade them with our barrier system, we didn't make money. Now, those edges are very uncompetitive. And the reason should be intuitive to you by now, because if we can't trade them, and we're pretty good, like we're not shitheads, we're not assholes by any means, we can trade well, but we still can't trade those certain types of edges, then other people probably can't trade them too. Now, And now that we're talking every day with our HFT guys, we're in a big group chat and we bullshit all day every day. It turns out that they don't know anything about our kind of trading, and we don't know anything about their kind of trade. Now, the reason for this is exactly what Ian said at the start of the webinar, is Goblin's firm had its last losing week in 2020. Like, they go 5 years without losing money. I mean, we go months and months and months without making money. So they're just not interested in anything like what we do. And so they don't know anything about what we do, and we can't do what they do. So in between, there's like this rich vein of very, very profitable trading to be done. There's a gap in the market between looking a few seconds into the future and traders like us who are looking a few days to weeks into the future. And right in the middle, it's like bullshit good. It's fucking amazing. So this is what we found just in the last week alone. And this will blow your mind. This is taking every coin that went up in the last hour and betting that it goes up in the next hour. Taking every coin that went down in the last hour and betting that it goes down in the next hour. Now that's amazing, right, Ian? Like you've never traded anything that good. I've never traded anything that good.
Mind blowing.
Mind blowing. Now, the catch is you can't do that if you have to get in and out of every coin every hour. Like, because you're turning over the book so fast that the trading costs and the slippage would blow you away. And this is after trading costs and slippage, by the way. So this one, another one we found this week. This is taking the correlation between every pair over over a 7 day period. So what correlation means is, do coins move together? Like, say, Ethereum and Pepe move together, or Solana and Jupe move together, or Ethereum Classic and Ethereum move together. Now, the ones with high correlation over the last 7 days, we go long. And this is what's called a scatter plot. This is the raw predictor of things. And what you're looking to see is, the more this is an up and to the right, steady sort of a line, the stronger your edge is. We see that a negative correlation predicts negative prices, and a high correlation predicts high prices. Now, this is what it looks like to trade. And I mean, Ian, this you never trade anything this good, right?
Well, I'd love it if I had something that went straight up like that.
Right, up like that. Like, I've never traded anything that good. Like, we don't, like, as daily time frame traders, we don't get access to stuff this good. And we sort of always knew it was there, but it's like the supermodel in the nightclub. It's like, yeah, look, I know she's there, but like, what's the point, really? She's not interested in a fat 50-year-old white guy. Like like but now we can go after the supermodel. So this is a variation on carry. So we trade carry in FinRev using 3-day average funding rate. Now, instead of measuring funding, we compare the funding rate to its own recent history of funding rate. And, it's not as amazing as some of those other things, but pretty fucking good too. And this other thing we found in the last week is that we knew that volume was predictive of crypto. And there's an intuitive reason for believing that, right? Because we know that when there's a lot of volume going into something, it's probably pumping. And when volume disappears, people are probably forgetting about it, and the pump is dying. So we knew that there was a probability that we knew that volume was a thing. So we started looking at volume in a different way. Instead of the total volume, we started to look at the number of trades. So what I mean is that I do a trade for 100 Bitcoin and Ian does a trade for 1 Bitcoin. Those are two trades. They're two dudes. So we're measuring effectively what is what are the people doing, rather than what does the total number do. And that's a cleaned up kind of version of it, if you think about it. And if we look at it, negative trade numbers compared to the recent past predict negative returns, like this is a negative, and high trade numbers predict positive returns, predict 2% gain over the next day. So we've got a number of things that we know are predictive of price. And in terms of our trend systems, which we already really understand trend well, but what we found is that trend effects and momentum effects are explainable, and the things that are predictive of trend effects are volume is predictive of trend effects. Size is predictive of trend effects. Trend works better on Bitcoin than Ethereum, better on Ethereum than Solana, better on Solana than Hyperliquid, better on Hyperliquid than some small coin, and on the shit coins it's negative. We know that open interest is predictive of how much something's going to trend. We know that liquidity, which we measure by open interest divided by average daily volume, is predictive of how much something is going to trend. And we know that how much something has trended recently is predictive of how it's going to trend in the future, to the extent that sometimes we're looking at trading the opposite of trend. Sometimes we're looking at trading mean reversion. And we also know that these behave very differently long and short. Now, the reason that things behave differently long and short is we have three sets of participants in the market. We have speculators, like dumb apes gambling on stuff. We have hedgers who are doing things mostly like long spot Ethereum, short Ethereum futures, trying to stay balanced but harvest the funding. That's a big chunk of the market. And we have a third part of participants who are what we call informed flow. Informed flow is people who know something. Now, we know logically that the short side has a lot of hedges because people are going long spot Ethereum, short Ethereum futures. So the short side should behave differently, and it does in fact behave differently. Now, as well as this, we've got our old carry systems, which are, solid, like pretty as good as you can trade for a day, once a day, basically, but they're not the be all and end all. We've got basis. Now, basis is the difference between spot and futures, and this is used for calculating the funding rate. So it kind of acts like a forward-looking funding rate, but nothing for nothing, it's harder to trade until you've got a high-frequency trading engine. Now, also this week, we discovered that change in basis is not necessarily better than basis, but very different because it contains different information. It's a new edge. It's a brand new thing that we discovered this week. Now, we also discovered that relative carry, funding rate compared to the recent history of funding rate, is very predictive. Like very predictive, much better than carry, actually. We've got number of trades, we've got volume, we've got open interest, we've got liquidity measured in various ways. We've got the lead lag stuff that I showed you before, and we've got this incredibly ape stupid hourly reversal where we just go long. We take a universe of 50 coins, we go long all the ones that made money in the last hour, and we go short all the ones that made money in the last hour, and that spits money. So we're getting somewhere. Now, next week, what I hope to come back to you is to say, okay, we've got all of these things that we've got, but we changed the clocks. So instead of doing them measured on time-based charts, where we've got, say, 1 minute between each bar, or 5 minutes between each bar, or 1 hour between each bar, or whatever, we're going to recalculate the bars based on the number of trades and the volume. So we're going to do a Bitcoin chart and say each bar is 1 Bitcoin. And that might take 10 seconds or it might take 10 minutes. And then we're going to run all of these things again over them. And we hope to have something slightly different, slightly diversifying. And this is how we build trading systems, right? We don't try and say, we don't try and mix them all conditionally. What we do is we get 50, 100 single variable things and we mix them all into a soup through a mathematical process. And we call that a ridge multivariable optimization. And this is a solved problem in finance. It's not there's no argument about which is the best way to do it. And this gives us the exact amount of each one that we should trade. So we know we should be, trading 5% 5% momentum based on size, 7% carry, 2% carry, 2% change in basis and whatever. So that is the next stage for us. And that I hope to have done in the next 2 weeks. And what that's going to do is that's going to give us some realistic and should be some very realistic backtests of how much money we can expect to make at what AUM. Okay, I'm going to take some questions now because that was all pretty complicated. We're going to go simple after this. Um,
I think one
it-
of the biggest questions here, Scott, is about smoothing things out because,
yeah.
like, trend
So
is flat, you
tr-
know?
trend is super annoying because it's flat and then it makes money, and then as soon as it makes money and you get excited, it kind of fucks you again. It's just so annoying, right? Like so what this should be, and we won't know exactly for probably about 2 weeks, but so far it looks like the kind of thing that has losing weeks but not losing months. And it makes money more than 50% of weeks. It looks more like an up and to the right line. Um, yeah, it so far it looks like what we want, which is, everyone who's actually done it. If I tell people, oh, you can make 100% a year out of trend, they say, oh yeah, that's great. And I said, but by the way, it's going to suck to do. It's going to go flat 9 months of the year. They say, oh yeah, 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 that's fine as long as I make it at the end of the year. But in reality, it's not fine. It's far from fine. People hate it. So hopefully we're going to be probably making around the same sort of money, but instead of it, we're going to be making it with lower drawdowns, and we're going to be making it much more consistently. And people, I think people would prefer to make about the same amount of money, but have it come in, every week rather than every 6 months or so. Does that answer the question?
Yeah, absolutely.
And we can't do that without like if I could do that now, I would do that now. But I can't because I don't have a high frequency trading engine. So, conventional wisdom is you should go fucking build a high frequency trading engine, but I ain't smart enough for that. And I don't have 5 years. So I just did the simple possible thing, which is find the best high frequency trading firm I could and said, let me give you as much of my company as it's going to take to make us partners. And,
Nice.
and I think it was a pretty gangster move.
And these systems, they all complement each other. They all blend together, and one works at a certain time while another one's on.
Exactly so, and there's a in the same way that owning five stocks is going to give you better returns than owning one stock. Um, there's like a rainbow effect where the more is the sum of the parts. Like diversification is the only free lunch in finance. This is also true in a slightly different way, but it's also true for trading systems. So with diminishing marginal returns, two trading edges are better than one. Three trading edges are better than two, and so on and so on. And we should be coming to market. We've got over 50 now. We should be coming to market with, I think, somewhere between 50 and 100. But the 50 we've got now, honestly, are 90% of the way there because it's a diminishing marginal return situation.
Incredible. Last question that I can see in the chat. How do we know this information? So the question is, doesn't back testing take a long time to complete?
Backtesting is generally not a great idea. For backtesting is not how you build trading systems. Backtests come last, not first, which is why we haven't done any backtests yet. Backtests are things that you use for um, checking how robust systems are, checking if you can change them a bit or delay execution and that they hold up. Backtests you use uh, for example, for checking that you've made mistakes. You don't use backtests for finding edges because there's a whole pile of overfitting errors that come into that. We've built our own backtesting engine. It's and we've got a giant, super expensive cloud computer cluster. So the back tests are the things that are coming in the next 2 weeks. So we haven't done any back testing, any serious back testing. We've done simple modeling, like some of those curves that I've showed you, are what we call finger in the air simulations. So those are simulations where we do something like, say, assume 10 basis points cost, which is what we have now, and and trade this on its own. What would it look like? A proper back test is a very, very complicated thing. Um, and backtesting is easy to do some sort of dodgy backtest, but it's very difficult to do an accurate backtest. Um, I'm generally in favor of doing backtest last, not first, because backtests are generally bullshit. Like we've all had that experience of, wow, you've got a great backtest, but where's your fucking money?
Mhm. Okay. That's all the questions that I see in the chat, Scott.
All right. So in other news, the smart contract is running. So all this is effectively a hedge fund inside a smart contract. You can see it running here. The colors are ugly because this is what we call wireframe diagrams. The graphic designer is working on the graphics. He's going to be done by the 26th of September. We go live. And you can see we've got wallet balances and vault balances and deposit. And this is how it's going to work. You just to get money into Hypertrend, you click on deposit and you connect your wallet and it deposits. That's how it works. Um, so I think it's great progress for a week. I'm really, really happy with this week. Our team are working really as hard as they can. I'm sprinting for the goal. I know I've been kind of half-assed with the emails lately because, like, I just go to bed every day, like, exhausted after work. But the goal here is to create $1 billion asset and share it with our community. Like we're no shit going to create $1 billion worth of value. We're going to create something that not just trades at $1 billion. I think if I wanted to, I could probably pump a coin to 1 billion briefly. But what we're going to do is we're going to create something that's worth $1 billion, but that's going to provide a lot of value for the whole world, and we're all going to get rich off it. And there's no road to me getting rich that doesn't end with everybody getting rich first. You guys are going to get your coins way before I will. So if you want to cash out and dump on me, you can cash out and dump on me, and I won't even have access to my coins. Um, so today I'm going to show you how to work our airdrop and build up stable, consistent, and passive cash flow from crypto in this presentation. I'm going to show you how to take part in what I think is going to be the biggest and most generous crypto airdrop on the hottest coin of this year. Everyone loves this project who we speak to. We're just like overflowing with institutional interest. So what I'm about to show you is low risk, and airdrops are the least riskiest thing you can go for in crypto. Least riskiest? I don't even think that's correct English. It's completely passive. So you set it once and forget it. It has the potential for massive 1,000% returns, and it pays out the highest passive income out of any asset you'll ever own. But let me introduce myself first to those of you who don't know me, give you a few reasons why you won't want to listen to me. I'm the gorilla here. That's my wife and kid. I've been trading a long time. I traded TradFi, trend following, and then I moved into crypto in pivoted pretty much 2019. And I traded under billionaire traders like Ed Secoda and market wizard Van Tharp. I made $3 million in 2 trades in 2024, which was a good trick. But I'm good at finding like small trades that are going to blow up. There's screenshots of some of those trades were really dodgy things like cock inu, get it? Cock inu, my cock is inu, and retardio. I bought Bitcoin when it was $4 and sadly sold it when it was $21. I only sold 1,000 Bitcoin, I'm I'm not that good. Like like I made some pretty big mistakes. But I also lift heavy weights, like really heavy weights. Um, in the 2021 bull run, I turned 40K to 770K, and recently, uh, we did this like $5,000 into $1 million challenge, and I did 1.3, but it was with a side account, and it was doing some pretty greasy stuff. So don't read too much into that. I only sold $100,000 worth of retardio, and I've got this lovely screenshot, which is all I have to show for it. I've got a screenshot and another 60 grand worth of retardio left, and it declined 95% since then. So um, Yeah, yeah. I should have sold. Um, the lesson is, by the way, if it's good enough to screenshot, it's good enough to sell. It's still a good trade. Still a good trade. Still made 100 times my money. So based on my experience, and I've been around a long time. I've won and lost and won and lost and won and lost, and I have no problem saying that I believe you're about to experience the most exciting airdrop to happen in the last 3 years. This opportunity isn't one of those you've got to be an experienced trader, you've got to know stuff like Scott, or you've got to have a lot of wealth stored already to take advantage of. There's no barriers to entry. The pie is big enough that everyone watching this right now can get their share and then some. And because one of the main strategies here is to gun for a massive airdrop, there's very little risk involved. Now, I just want to talk about why the fuck I would give away 32% of our coins to all you guys. And it's not because I'm a nice guy, it's because it serves my business purpose. The thing is that institutional investors and people who want to buy in size will not touch a coin while it's just me and my team who own it. The main thing that they are interested before they will seriously look at a coin is that the coin is in the hands of thousands or ideally tens of thousands of people. If it's in the hands of tens of thousands of people, then the odds of all 10,000 of them dumping it and the project dying are very low. If the project is held by five guys who all know each other and we can all dump at the same time, the project can die. So by me giving away a big chunk of the company, it's smart, but it's smart and it's great for you guys, but it's also great for me. So if you're wondering why is Scott just giving this money away, I'm not giving this away because I'm a dumb cunt. I'm giving it away because I'm a smart cunt. Now, to be fully transparent, one of the reasons why I'm excited about this new token, and it's an airdrop, is because I'm building. And I've seen everything that's backing it up. I've shown you some stuff today. I can tell you, no one's ever done anything like what we're doing. Like this is, I believe, we're building the infrastructure that hedge funds of the future are going to use. Now, we're copying the playbook from the most exciting airdrops of all time, which is Hyperliquid. It's the most successful by far. They airdrop billions to users, and then it just went straight up because they did it just right. And there's no need to reinvent the wheel. Let me be straight with you here. We're here to get our community rich and get ourselves rich too by aligning ourselves with our community. I don't need to go out and create a new community. I've got a community. A community is you guys. You guys helped build the thing. You guys deserve to get rich. You're getting rich. Sorry. I believe that this is the true ethos of crypto, and I'm happy to be upfront about that. If you think about the most successful projects that have lasted the longest time, Bitcoin, Ethereum, Doge, and now Hyperliquid, they're all very, very widely held. This is the key to crypto token success. So how's this going to make you rich? Well, of course, there's the trend airdrop. That's free money, but that's just the start. It's what happens afterwards that's going to make you rich. And this airdrop, it's not just a one-time cash grab. Sure, the airdrop will get you good money, but let's be real, 6,500 to 9,500, that's not enough to retire on. It's enough to get started with. So the way you'll be making retirement wealth is you're going to get a massive windfall airdrop. And with that airdrop, there's a way to build both returns on par with the old days of Bitcoin, talking doubling your money every year, but without the drawdowns. And you'll get the highest yielding passive income out of any asset. We're talking, it looks, I'm very comfortable saying it's going to be at least 50%, probably higher, and in a lucky year, probably 80%, with very low drawdowns. Normal drawdowns 10%, maximum drawdowns 20%, denominated in USDC stable coins. And that should come in the form of making money most, but not all weeks and almost all months. So it's not going to be like it is now, where it goes flat for long periods. And so this is cash in the bank that you can live on because it's stable coins. It's USDC, not some magic beans you got to sell to make money. Like you can just you can hook one of the new credit cards up to a USDC wallet and just walk around, spend it all day. You can live off it. Tax office doesn't have to know unless you want to tell them. Good luck with that. Now, as counterintuitive as this might sound, you might not want to sell your initial 6,500 to 9,500 airdrop when you hear what I have to say in the next few minutes. At the very least, what I promise you is that you're going to walk away from this presentation with a much better understanding of how to actually get passive income, build retirement wealth with crypto. I'm not talking about doing stupid shit like buying a Lambo or buying a Rolex, or you can do that if you're fuckwit. For me, wealth is being debt free and having enough money to never work a day in your life, to retire your spouse, to have the house that you want to live, to have the freedom to do whatever you want, with whoever you want, wherever you want, for as long as you want. And this has always been the beating heart of crypto. It's when the little guy gets rich. This is something that you can have too. So let's begin by answering this question. So how do people actually make millions in the crypto markets? Well, first of all, if making money in crypto seems like a mystery, let me pull back the curtain and show you how the whales actually do it. So the obvious one is insider trading. You know, all those meme coins that go up 100x, they're all coordinated pump and dumps. Like where there's a tip, there's a tap. You know, you only have to see the most recent, whatever the fuck it was, Trump's one, World Liberty Financial, to see that the guys in the know are dumping it while they're telling retail guys to buy it. It's a tale as old as time. In crypto, it's no different. Fucking Nancy Pelosi style, right? Um, Retardio Cabal, my boys. Um, yeah, I know all these guys. They're all coordinating pump and dumps. Um, Insider trading is probably not feasible for 99.9% of everyone who's watching this webinar right now. And unless you don't want to get involved in it, you probably don't want to get involved in those sort of terrible shit coins unless you really know what you're doing. But you can still make plenty of money without being an insider. The second way people make money is what we do right now is bringing over TradFi trading strategies that we know have worked because they worked in stocks, they worked in bonds, they worked in commodities, they worked in gold, they work in oil, and then applying them directly to crypto markets. That's basically what FinRev is. Strip the marketing bullshit away. That's what we do. Now, my hedge fund buddy, Macrocephalopod, Chris, he runs $800 million now in crypto. He does the same thing, but at what's called mid frequency. And what mid frequency trading is exactly what we're trying to do with Hypertrend, which is bolting a high frequency trading engine onto the top of a slow system and turning it into a fast system. So mid frequency is microseconds to minutes. And these guys are making 10 times the returns at nearly double the average hedge fund Sharpe ratios just for transferring TradFi strategies over to crypto. So this is really the biggest unfair advantage in the history of finance. Um, it's the only one available to the little guy. And that's exactly what I'm going to show you today. So I'd like to show you how to use the airdrop you're about to claim to unleash the most consistently profitable Wall Street trading strategy. Have it applied to crypto for you. You won't have to lift a finger to do this because it's all done on full autopilot. And I've been doing this for the last 5 years and doubling my money every year. I can guarantee you've never seen anything like this before. So let me show you how Wall Street's been making the rich get richer with this single method. So the most reliable, consistent moneymaker in TradFi is called the law of momentum. It's also known as trend following or time series momentum. They're different words for the same thing. And so it's worked for nearly 100 years. You're going to hear me use these terms interchangeably, by the way, they're the same thing. So what is the law of momentum? It's a trading strategy that can be used with mathematical precision to predict which assets are going to be profitable. It's all about the momentum in which the price of an asset moves. Basically, the stronger the momentum, the bigger the price movement, because a body in motion stays in motion. And what I mean is this, put simply, if it's gone up a lot recently, it's probably going to keep going up a lot in the near future. That's really what it is. So this is an edge that was previously only available to the biggest hedge funds in the world, and there's a big industry. They've been printing money over 40 years. No firms have gone broke doing it. They've been profitable every decade. It's kind of a pain in the ass to do in the real world. Ask me how I know. I've been doing it for nearly 20 years, but it definitely makes money. Definitely makes money. And there's countless white papers and studies how momentum has been one of the most consistent trading strategies. It's definitely been profitable for the last 137 years. And firms like Dunn Capital have outperformed the S&P by 475% over a 50-year period. I've done better than that. I've got my retirement accounts with these guys. They just crushed it out of the park. Yeah, absolutely crushed. The trend following index, this in light blue is all the firms who do this strategy, and this light gray line is the S&P 500. You know, the S&P 500 is on a pretty good run, right? It's the biggest bull market in history, and trend following still beats it. Now, if we go back to the old school, this thing here, this is the first human city. This is the first time we came off the African savannah, started huddling together for warmth. And in the very first human city, 5,000 years ago in ancient Sumeria, modern day Iraq, before they even had money, before there was a word for money, they used barley as money. And they stored the barley prices on these clay cuneiform tablets, and they dug up a whole pile of them inside this big ass fucking, not a pyramid, but whatever the fuck it is. And it turns out you can run our trend following systems, the same systems we run today on that, look exactly the same 5,000 years later. So what we've got is something that it's worked a long time, since before there was even money. These 16th century Japanese rice markets, they were the very first futures markets. It was a place called the Dojima Rice Exchange. Um, I, for years and years and years, those of you who've been following me for a long time might have seen my retest variation patterns and some of my old systems. I didn't come up with those. They came from Japanese 16th century Japanese rice traders who knew about trend following. Their systems work just as well today as they did 400 years ago. So this guy, I really like him. He's a bit of a smug prick, but he's made $1.6 billion from Momentum Quanting. He runs a firm called AQR Capital Management. Now, in FinRev, we do pretty much what his firm does. Why? Because you don't need to reinvent the wheel. And according to him, trend following has worked annoyingly well for at least 100 years. So for every decade, it's made money. And that's pretty good for TradFi. And what I'm trying to say is that momentum is as close to a law of gravity as we have in financial markets. It's worked in stocks, it's worked in bonds, it's worked in real estate, it's worked in FX, it's worked in commodities, it's worked in every country in the world. It's worked for as long as money has existed. It's worked for 10,000 years because human nature hasn't changed, human psychology hasn't changed. We're still greedy, we're still fearful. Now we've taken these same Wall Street momentum algorithms, we applied them to crypto. As powerful as it was in TradFi, in crypto, the law of momentum puts your returns on steroids. Like a lot, it's a lot better. It's 2.5 to 3 times better in everything we've ever tried. And the reasons for that, the market's constantly growing and new money inflows from institutions. The president is completely on board. He's now got a $5 billion worth of crypto. You think he's not going to pump his own bags? Come on, he pumps all his bags. The markets are open 24/7. There's no barriers to entry. But the real reason momentum works better in crypto is because if you've ever had to deposit money into crypto, get it out of your bank account into crypto, it's a complete ball ache. And if you've ever had to get money out of crypto back into your bank account, you'll find it's also a complete ball ache. That friction between those two things makes it far more likely that you just give up and say, oh, fuck it, I'll leave my chips on the table at the casino. And because of that, capital is sticky and siloed and there's frictions going on and off. And those things create momentum effects, which we monetize. So we began applying momentum trades to the crypto markets. We generated a 4,815% cumulative return since 2019. This is equivalent to doubling your portfolio with compounding every year. This would turn a $10,000 starting investment into 481,500 today. The good news is it's worked for a long fucking time. So you just need to let compounding do the work for you. So here's the value of a $10,000 account compounded at a more conservative 100% per year. By the way, our hypertrend vaults will let you wind it up or down to whatever level of wildness that you want. It's going to start off at what we call 20 volatility, which means roughly maximum 20% drawdowns. If you can handle 40% drawdowns, you can double the returns. So our momentum by year 7 or 8, this is generally enough for most people to retire on, but you'll notice it starts slow. You don't really notice it until about year 5, and then you're off and running, and really the big gains come later. But if you're impatient like me, you don't need to wait 7 years to become a millionaire. We can speed this process up significantly. We've already done this before. So here's what we did to cut the time to generational wealth down in half. I got my best trader buddies on board. I took like James Hodges, who's obviously a much better quant than me. Yeah, he worked for BlackRock. He worked for a bunch of other investment banks. Um, And we built our own algorithmic trading system that executes momentum trades in the crypto markets with our HFT front end. This algorithmic trading system is called FinRev. You might have heard me talk about our automated trading systems before. Well, it's generated insane returns for me, and the people in my community have used it in the last 6 years. It's generated 4,815% since inception, beating the returns of Bitcoin, Ethereum, and the best tech stocks. Quick, quick vibe check. Raise your hand if you think you'd be richer today if you'd invested in Bitcoin since 2019. It's kind of a no-brainer, right? Like, FinRev has consistently beaten the returns of Bitcoin with less drawdowns. The Bitcoin drawdowns have been hateful. They've been 80%ers. And our maximum drawdown along the way has been 35%, and our average drawdown is less than 20%. Which means if you've been using FinRev since the early days, you'd be richer today than if you invested in Bitcoin or tech stocks like Nvidia. So what is FinRev? It's an automated trading system that trades using momentum algorithms, the same ones from Wall Street. They're all very standard, by the way. There's not anything controversial about any of our systems. But we just apply them to the crypto markets because it's an easier poker table to sit at. So based on the trading parameters we've given FinRev, it scans the blockchain 24/7 looking for the strongest momentum trades. Um, so this is what it looks like. So for example, it'll go short the ones that have been going down recently, and it'll go long the ones that have been going up a lot recently. I'll show you the exact weights that we've got today in a little bit. So on the right are some examples of some positions. It's already obviously in some of the most obviously profitable coins like Bitcoin, Ethereum, and Hype, but it'll also execute profitable trades on coins you've never heard of, like Casu, BSV, which I think is a scam coin, etc. And this all runs in the background while you get on with your life. Now, overall, thanks to FinRev, we never had a losing year during both bull and bear markets, and that's something which is unheard of. Like you can go through these terrible bear markets and not lose money. This is not stuck to one position. You see, when Bitcoin crashes, FinRev protects your positions, just like a hedge fund manager should if they're doing their job. And this is how it makes money even during a bear market. So some cool facts about it. 10 million generated for clients who are currently FinRev members. We hold, I think it's just under 18 million today, assets under management. So if you want to know that it works, well, it's not only making money, there's a lot of people who've invested using FinRev already. It's got most of my wealth in it. And it's not like those shitty trading bots that require you to constantly check in and monitor. It's 100% hands off. I've been in Bangkok all week and I haven't checked it once. And I check my accounts, every few weeks. I don't check it once a year because, it's kind of my job. But I know but I don't touch it. Like I don't try and like time it or zig in and zag out. Like that's retarded. Don't do that. All you do is you deposit the funds you want FinRev to trade with it and let it do its thing. Now, I could talk about FinRev all day, but why don't we just have a look at it now? Let me just light it up. All right. 1 second. Probably should have done this ahead of time. But let's see how it's going anyway. Oh, okay. Let me share. Okay, so let's pick a date. Let's go back 2 years. And let's pick two today. And let's go. Let's have a look. So this is average of all our clients who are using it, including myself, and for the last 2 years. And so how much did it make over the last 2 years? 142% in 2 years. So, but you'll see that it also came in kind of an annoying manner. And this is what we're changing with the new system to make it something like that. It won't look exactly like that, but it'll look something like that. Which I think everyone would prefer. I certainly know I would. But I mean, we've made money, so it's not all bad. Um, it's pretty fucking good. All you have to do is shut the fuck up and reliably at the end of every year you get one or two. Yeah, at the end of every year, you'll have 2 to 3 of these big ass spikes, and the longer it goes between the spikes, the more likely the next one is coming up. We've been quite a long time between spikes, so I'm quietly confident that we'll have a new one very, very soon. And then, that should take us to 250% pretty quickly over 2 years. And it's always this way. Um, yeah. Oh, what I was going to show you? Okay.
Nice. Just one thing I might ask there, Scott, just based on what I'm seeing in the chat. So that picture, the graph that you showed before, that's every account that we've got on FinRev, and that's the performance. And the bit that
Yeah,
I'm getting to
that's
is
that's after costs, that's after fees, that's what you've got in your account. That's
that's it. So the bit I'm getting to is that all of FinRev can be winning like that, but individually, because FinRev trades everybody's account individually, it's like if I've got, say, a low balance, a high volatility, and I've only been here a couple of months, there's
yeah,
a
it
good
could be,
chance I could be in drawdown whilst FinRev is still winning. And I think that that might be worth just touching on.
yeah. Okay, so you get to choose how wild or mild that you want this to run. If you if you want to set it so that you make more money when the times are good, you lose more money when it's going sideways. If you want to set it so that it makes less money when times are good, you lose less money when times are sideways. Because it turns out that taking risk is risky. And taking risk, and I want to be totally upfront about how trading works, and I don't want to bullshit. I don't want to be one of those bullshitters that bullshits about the way that shit is. What we're doing here is we're not getting paid for doing nothing. We're getting paid for doing something very, very useful. And the useful thing that we're doing is we're taking on risk that other people don't want. Because most people like to sell high and buy low. What we're doing is when the thing starts to go up here, we're buying high. We're buying right here. So this is how trading systems work. We generate a forecast of predicted future returns. When that forecast is negative, like in here, we're betting that the market goes down. So from here to about here, we're betting that the market goes down. From here to about here, we're betting that the market goes up. And then again, it started to go up. So we're betting that the market goes up. And now we're taking off our positions. And where are we right now? We're almost no position. We've got almost no opinion about where this thing is going to go. So this is how it works. Like literally, this is how it works. And this is how it works with all our new edges. This is how it works with our high frequency trading engine bolted on the front. This is just how trading works in every trading system in the world. You generate a forecast of future prices. If the forecast is positive, you bet. If the forecast is negative, you bet against it. So to put it all in perspective, if you start with a $10,000 base and you stick to FINRA's returns, you can set your target whatever you want. You can set it higher than 243%. Fuck, we've had people 20x accounts here doing it. By the end of year 4, you've already amassed $1 million. Beyond that, well, you'd be making so much that you just wouldn't believe me. It would hit all your bullshit filters if I told you the numbers. But you can, and people have 20x accounts doing this. You can't get these kind of returns anywhere outside of crypto. And this is how new millionaires are being minted every day. You could easily be one of them. In short, FinRev makes money for you on autopilot by taking what works in TradFi and applying it to crypto. All you do is you throw in whatever funds you want it to trade with, you set and forget. But now you can actually make more money from FinRev. On that note, let me ask you a question. How would you like to become an owner of FinRev? Well, what the fuck does that even mean? And how does being an owner make you more money, and why is it smart? So using FinRev makes you money from the returns it's already generated from Wall Street trading algos like Momentum, applying them to the crypto markets. So you get rich from just using FinRev, but there's 2 more ways that being an owner makes you even more money. So number 2, in order to distribute ownership of FinRev with our community, we're going to turn the entire thing into a token. So owning FinRev's native tokens represents a right to grab your share of 20% of all profits generated by FinRev forever. So let me be clear. The 20% of all profits generated by FinRev are going to the trend token owners forever. As we grow that, as we grow that into $1 billion thing, that's going to be a lot of money, and it's all going to go to the trend token holders. Now, that might sound crazy. Why would we give away our profits? It's the same issue why companies issue stocks. When you increase the size of the pie, everyone makes more money. Our one and only goal is to make the pie really big, and I'd rather own a smaller size of a global size pie rather than own 100% of a small local size pie. When we pay out 20% of profits to FINREV token owners, it's essentially acting like a dividend stock. It's paying out cash flow, except it pays out way more, between 40 and 80% per year in USDC. That's with no leverage. And you can double or triple that if you wanted to, if you're willing to put up with higher drawdowns. Now, if you can name one dividend stock that pays out 40 to 80%, you won't find any. It just doesn't work that way in the stock world. So we're talking, I think you can really comfortably count on 50%. I think 50% returns in USDC on USDC are very, very attractive if they come so that you're making money most weeks and almost all months. You might have, one losing month every couple of years. So not can't guarantee that you'll be like every single month, but I think a losing month would be rare and unusual. I think that's the plain English version of how it's looking so far. So just like stocks, you not only make money from the profits shared out to owners of the token, you also make money when the value of the token goes up. Now, the concept of making money from a token should be familiar to you already. There's a demand for a token, which there already will be from FINREV. Then demand drives the price of the token up. So what we've done is we've set in motion a plan to launch FINREV's native token at $100 million valuation. That's set in stone now. It's definitely launching at 100 mil valuation, which you can own a share of as an owner. We've got a playbook to get this to $1 billion coin. Now, the playbook is super interesting. Basically, we've got a bunch of tokenomics effects where we force ourselves to go and buy trend token on the marketplace, like a stock buyback, and buying pressure is going to pump the token. So lastly, this coin is also going to have a passive income component that spits out raw stablecoin cash for anyone who owns the native token. So you get rich from the passive income just holding the profits the token generates. The passive income component generates more demand for our coin, which drives the coin price up, making you even richer if you choose to remain an owner. So to summarize, as a FINREV token owner, one, you get rich from FINREV trading for you. Two, you get rich from the passive income you earn just from holding the token. And three, you get rich when the price of the token goes up. And I think this is the big one. I really think people outside of our community buying the token because the token is it's designed and engineered to be a token where the number goes up. People love buying assets that go up. We're engineering us from the ground up to turn it into $1 billion coin. So our ultimate goal is to build a forever asset that generates USD stable coins in perpetuity. A forever asset is one you don't need to sell. You don't need to time the top. You don't need to sell out. You don't need, I won't need to sell personally. Now, a coin that never has to be sold at any part of the crypto cycle because it spits out raw cash every month, an asset that you can stack so it pays for your retirement for the rest of your life. And by the way, you guys, when we launch this, you should track my personal wallets to see what I've got. I don't get my coins straight away. They vest very slowly. And they only vest if I make money for you guys. But you should be able to check my wallets to see if I'm cashing out. And if I cash out, you probably want to cash out too. But if I'm not cashing out, if I think that I'm letting it ride with my own money, you should probably consider that too. Now, to achieve this, we've tokenized FINREV's entire algorithm into a coin called Trend. And I truly believe this is the path to wealth for everyone watching this right now. We're not only going to give away 32 million to be exact in airdrops, just holding the coin is going to yield the highest passive income stream, 40 to 80% USDC out of any asset you'll ever own. It easily has the potential to become $1 billion coin. Well, that's not quite true. You can buy Trend right now. Let's see what it's trading for. You shouldn't. Please don't buy it right now. It's at $54 million market cap. There's a better way to, rather than buying it for 50, it's launching at $100 million market cap. But when you run the maths, if you were going to buy it today at $54 million market cap, you'd be much better off. doing the airdrop play. You'll be like 5 times better off doing the airdrop play. So please don't go and buy it today for $54 million market cap. You will be like 5 times better off doing what I'm about to show you. So before I show you the best way to get a massive stack of trend coins and how to get filthy rich off these tokens, let me explain how it works. Trend is FinRev's native token. If you've heard me talk about trend before or hypertrend, you want to pay attention because there's been some massive developments. There's several ways that FinRev's tokenomics are going to brute force actually, the price of this coin to go up. So tokenomics are the rules of a coin. They're mechanisms that affect a coin's price, its supply and demand. It's basically what's in the smart contract. So our tokenomics are specifically designed to make the number go up by building in mechanisms that generate more demand for trend. More demand for the token means the price of the coin goes up. And this is what you want. You know, 50% a year is attractive, but what's really attractive is the thing doing a 10x or 100x. And we all know new coins and if coins don't die, they always do a 10x and the good ones do 100x. And I think this is a good one. So let me show you some ways that the number go up tokenomics work with trend. So at our real world revenue. So the first thing to notice that as opposed to most crypto projects don't have any fucking income at all. They're just magic beans, bullshit, like a meme coin. It's nothing behind it. No wealth is generated. It's just changing hands. So the real world revenue here that we generate by the protocol, because we're actually making money for people who deposit with us, gets paid directly to token holders. And this creates demand for the native coin without being inflationary. So we're not printing any new coins. There's only 100 million trend coins ever. If you want passive income paid in USDC, buy the trend coin, you get paid USDC into the same wallet that you bought the trend coin with, just automatically. Now, remember, FinRev already has nearly 20 million in assets under management, generates real world revenues. So this automatically creates demand for trend because holding the coin generates passive income for owners. So when people from the general crypto markets outside our community, when they buy trend coin for a share of the profits, price of the coin goes up. There's always been and always will be demand for assets that generate passive income. And this is one piece of our number go up tokenomics, which are pretty slick. So most tokens will pay you to hold their token, staking. Like Aptos will pay you to stake Aptos token, but they pay you an Aptos token, which is a magic bean with no fucking intrinsic value, and it's fucked. Because as soon as you get paid Aptos tokens, immediately you want to go to the market and sell them because they're not worth anything, and you've got to beat the other people selling them, and then the price goes down. And we see this in pretty much every token that's inflationary. Like, for example, let's pick some recent ones. Bera. You can see since launch, it's gone up and gone down, but it's mainly gone down. The aptly named useless USDT. Let's see what Trump's World Liberty Financial has done. Oh, what a surprise. Oh, Donald Trump launches a coin and it's like lower than it was. Like this is a consistent phenomenon because if you pay people in the native coin, they have to sell it. So what most other tokens do is, an example is you stake Aave, you get paid in Aave tokens. You have to sell those Aave tokens because you know they're going to be worth less tomorrow, and the price of Aave drops. So we don't do that. Instead of giving you trend tokens, we give you USDC tokens. So every time profits are shared, it's sent out in USDC. Now you can take trend tokens, and we give you incentives to do that, and those incentives are very, very high. If you want trend tokens, we have to go into the market and buy trend tokens to give them to you. So you buy trend pays out yields in USDC to holders. There's no trend token emissions. There's no more trend tokens being printed. Therefore, there's no sell pressure. The price of trend continues to go up. And this creates a flywheel where people are incentivized to hold their trend instead of selling, which makes the price go up, which makes them more diamond hand hodlers. This is essentially the same mechanism that Bitcoin used. So nobody wants to sell and be the guy who sold at 10,000 Bitcoin for a pizza and look stupid, so they hold on to them. So our numbered go up tokenomics mechanism number three is our supply is fixed. We never generate and we cannot generate more tokens. It's like how Bitcoin has a hard cap at 21 million, which makes it deflationary by design. We just stole that mechanism. There's several more layers than this, but in simple terms, Trend has multiple layers of mechanisms that force the price to go up by building demand for the coin itself while reducing the reasons to sell Trend. Basic supply and demand. Now, we're finishing up our white paper that explains all the details around our number go up tokenomics. Ian, I'll post that in the chat at the end of this. I'll post the latest version. More details on this soon. So, to summarize exactly how being an owner of Trend is going to make you rich, using Trend gets you the massive 4,815% returns from FinRev. You also just make money by investing into the Trend coin as the number go up tokenomics come into play. And you get paid passive income in USDC just for holding Trend. You're going to get a big fat airdrop worth several $1,000s if you choose to participate in our token launch. You can sell that on day one if you want. I'm not stopping you. I just think I think you'll be playing yourself if you do. So, what part do you play in all of this, and what makes you eligible for this airdrop? First of all, we're completely bootstrapped. We're beholden to no one. There's no investors, no asshole VCs. This is all community built. So let me be real here. What we're building is ambitious. It's wildly ambitious. Requires world-class developers. Like average guys that can't get this done. Requires the best quants. Requires a whole heap of money to get it going. This is why most crypto projects make the deal with the devil. They take VC money, but we don't want to do that. We're community first. The reason we're community first isn't because of some altruistic BS. I'm trying to make money. It's because our bags are tied to the community, because we're doing it that way, because we want to align our goals with the wealth of our trend holders so that if we're doing the right thing by you, you don't dump on us. You get your coins first. You can dump on us, but if I'm making you guys money, if I'm taking you on a wealth creation journey, if every month your trend coins are going up, I'm pretty sure you're going to stick with me. And I'm not going to ask you to help me out without making it worth your while, like really worth your while. Everyone who invests in FinRev today gets a massive airdrop of trend when we launch. This is true for all of our historical and new customers until the official token generation event. In other words, every dollar you invest in becoming a FinRev user today, I'll give every dollar back as a thank you in trend token airdrops. So essentially, you're getting FinRev for free. You could sell your airdrop immediately, but as you've seen today, I think that would be a seven-figure mistake. You might end up being like that guy who traded 10,000 Bitcoins for a pizza. So you not only make money with FinRev by joining today, which is the trading system that's generated 4,815% returns through both bull and bear markets, you also get back your entire initial investment in trend tokens when we launch. If you choose to hold your trend tokens, not only do you get paid USDC stablecoins for being an owner, which is passive income, as people outside of our community buy the trend token, it means your trend token price goes up, making you even richer. So compare this with a simple metaphor. Owning trends like owning a real estate portfolio that doubles in size every year. So 5,000 in passive income becomes 10,000 in passive income in year two and 4,000 in year three, and so on and so on. All the while, the value of your portfolio is going up till you decide you want to sell it all and fuck off. So since I started trading professionally 20 years ago, I always wished there was just a simple set and forget asset I could hold that would just spit out US dollars for me every month so I could stop thinking about money and just live my life. This is something every single one of our 40 plus employees at my company want. We built it for ourselves. If a forever asset that pays stablecoin yields for life is something you'd like too, and you'd like crypto to finally grant you the early retirement wealth you've been chasing, well, this is it. This is your opportunity. And remember, my goal for you is the ability to do whatever you want, wherever you want, with whoever you want, for as long as you want. And money is just a tool to buy time and freedom while compounding does the real work. Trend and FinRev is the vehicle to get you to financial freedom. So here's the deal. We have two tiers of FinRev available for you today. FinRev Gold is 6,500 for 3 years of fully automated trend following trading. FinRev Platinum is 9,500 for 3 years of fully automated trading with all of our systems, including future upgrades. I'll tell you what the difference is now. So here's the deal. Whichever tier you pick, you get a one-to-one airdrop of the amount you paid for FinRev today in trend tokens. So signing up for FinRev Gold will guarantee you a trend airdrop worth at least and much more in reality than 6,500. FinRev Platinum guarantees an airdrop of at least, and the reality is much more, I'll explain why, of 9,500 in trend tokens. So here's the deal. In other words, you're essentially getting it for free, and those same trend tokens could be worth millions in the near future while also paying you passive income as an owner holder. So we've got a special deal for today only. You have to, I think we've got it on for 5 days. If you, no matter which tier you pick, we'll match your deposit up to $1,000 today. So if you join today, you deposit $1,000 into your account, we'll add another $1,000 into it. And so you'll have, in this example, you'll have $2,000 to start trading with immediately. This is the best deal we've ever offered, by the way. This $1,000 match your deposit promo will only last until the 14th. Oh, so Sunday. So make sure you don't miss out. Make sure you book your call ASAP to lock in your free money. So FinRev Gold, which is 6,500 for 3 years, you get 3 years worth of automated trading, algorithmic trading with FinRev. You get a one-to-one trend airdrop worth 6,500 at the time of coin listing. You get a VIP onboarding with one of our expert crypto trader coaches. You get comprehensive statistics and monitoring, exactly what I showed you from the dashboards today. You can delay starting or pause at any time. So if you find out that Trump's launching another meme coin and you want to jump on that, and then you can pause, go make a play, bring it back in. I support that kind of like irresponsible, degenerate gambling, and I do it myself from time to time. And we've got our double your money guarantee. If you aren't in profit after your first 12 months, we'll let you use it for free until you've doubled your money. And so to join, you should book a call, and these calls fill up. So get in today, finrev.trade/call. Now, 9,500 is for the platinum system for 3 years. So you get 3 years of automated algorithmic trading. You get a VIP onboarding with one of our expert crypto trader coaches. You get a one-to-one trend airdrop with at least and far more than 9,500. And pro tip, this could easily end up being worth 10 times when we grow our market cap to $1 billion. So FinRev Platinum is designed to generate higher returns than gold. How? Well, it blends many different edges. FinRev Gold is just trend following. And remember all those things I showed you at the very start, all the different volume things and other things that we keep finding? These all go into FinRev Platinum. Now, the return target is higher. You can set it even way higher than that if you want. If you're willing to put up with higher drawdowns, nothing is free. You get higher drawdowns, higher returns. Platinum uses more than just trend following. It blends multiple trading algorithms to find more profitable trades, which is why it provides higher returns. Now, the big benefit that feedback is from most people, that you get 3 accounts. And so with FinRev Gold, you get one account, which is your main account. Full disclosure, I use FinRev Gold. There ain't nothing wrong with it. It's not a second-rate product. But with FinRev Platinum, you get the ability to do different things. So you can either run different levels of risk and return. So you can run one account as a degenerate account that trades like a meme coin. You can run one super safe. You can set up a second account for your children so you can grow it like a college fund. You can have like a for fun account that's trying to 20x an account. And you can, and many people have got insane returns running FinRev at a very, very high volatility. And you can see this guy put in $200 and turned it to 8 grand pretty quickly. It's about 15 grand now. But he would have to expect in the long run 70 to 75% drawdowns doing this. But he's growing it for $200. He's grown it from $200 to it's $15,000 now. So he's okay with it. Like, he had wild swings along the way. If you want to simulate the meme coin trading experience, except fully automated, you can do it with FinRev. So to do that, you just use the platinum and set the account to go for riskier trades. And you grandfathered into all the new stuff we keep finding, like we're at 50 edges now. We're at 50 systems now. We'll be close to 100. You can delay starting or pause at any time. You get trend following, cross-sectional carry, which makes, because they both work at different times, it's slightly smoother. And you get the same double your money guarantee. If you aren't in profit after your first 12 months, we'll let you use it for free until you've doubled your money. Now, on security, FinRev can never It's just not possible to withdraw your funds. They sit in your crypto exchange with a secure API code that lets us trade but not withdraw. So not me, not any of my employees, no one else has access to your funds. Only you have access to withdraw or add more funds. So what are you really getting today? Getting access to the rapid wealth building engine that fully automates massive returns with crypto during bull or bear markets. And remember, this has generated a 4,815% cumulative return since inception. It's beaten Bitcoin, Ethereum, Nvidia, anything you want to make. It's so whether you join gold or platinum today, it's going to build the path to financial freedom for you on autopilot, thanks to the profitable trading algorithms it's built on. It means $1 million retirement is actually realistic for anyone who sticks with it for the long haul. And I estimate, and I emphasize, this is not a get rich quick scheme, it's a get rich slow scheme. It's worked for me. It'll work for you. In addition for this, whatever you pay for FinRev today helps our company continue to bootstrap without investors, which is why I'm going to airdrop the same amount you paid today when we launched the Trend Coin. This basically allows you to use it for free since we're airdropping the amount you invested as Trend tokens. Plus, we'll match your funds up to $1,000 deposit into your account immediately in USDT or USDC when you join FinRev today until the 14th only. So in other words, by joining FinRev Gold or Platinum today, you not only start doubling your money every year with FinRev, you also get back whatever you paid today in Trend tokens, which then pay you out again in passive income, USDC, out of the profits FinRev generates just for holding the Trend coin. As we build Trend into a $1 billion coin, the airdrop you claim could be worth 6 to 7 figures. I think it's going to be worth a 7-figure airdrop. And I've done this before with Hype, where the airdrop I got from them is worth $1.4 million to. So we're copying their airdrop playbook and building in the number go up tokenomics to make our Trend bags worth 7 figures each. When you join FinRev today, you get to be part of this massive wealth generation event. This is the best deal I've ever offered. I don't think anything's ever going to top this. So book a call now and go join FinRev Gold or Platinum. And ultimately, this is the only way you can be eligible for the airdrop. And again, it's as a thank you for helping us get where we are today. So you can book your call with my team at this link. And I'll take questions from Ian. Yeah, I'll hand it back to you. But you got those calls fill up quick, so you should book them quickly.
All right, great stuff. So I've got a few questions that I'm going to lump together from the chat, Scott.
Please.
So I think the first thing perhaps is to put a few things in big boxes for people because we're speaking to current members and potentially new members. So
Sure.
the first box is just exchanges. There's Hyperliquid, there's Bybit, there's all these other exchanges. And then
Hyperlink,
there's and then
Binance,
there's
Bybit,
this,
KuCoin.
this is it. And then there's FinRev. So FinRev is not an exchange. You put your money onto an exchange. FinRev is an algorithm that trades your money on your exchange. So that's the first two boxes.
Yep.
The new vault that Scott has talked about today, think about that as like a faster horse than FinRev. And we're going to shoot FinRev. So FinRev, that horse will be gone. And then your money, which is on an exchange controlled by you, you will move that money into the new vault.
Well, actually, technically, you'll move it into a wallet that's controlled by yourself. Hopefully, if you're smart, with some sort of hardware device like a ledger or a Trezor or something like that, and then that hardware device, so it's totally secure, will deposit to the Hyperliquid vault.
Brilliant, brilliant. So
And
let's say, oh,
how that works in practice is the vault is a tokenized hedge fund called TLP. So you buy this token TLP and it goes up. It starts off at $1. If we make 50%, the TLP is now worth $1.50. So you've got a token that you can sell at any time, which represents your share of the vault. That's how it works. So it's not trust me, bro. It's like there's a token, and that token is the value of all the money that's invested in the vault. And what happens when you deposit money to the vault is it what's called instant mints via an atomic mint, a TLP token. And I know that's a bit nerdy, which is why. Didn't say it before.
Yeah, that's okay. That's okay. Because a little bit later we'll be publishing the white paper, but I just want to talk about a few things with the white paper before we drop it in the chat. So that was the first thing then, to make sure these things are separated. So if you buy FinRev Gold, or if you buy FinRev Platinum, or if you're already a member of FinRev, then when the airdrop comes, the airdrop will be the equivalent of what you paid for your FinRev. So, whatever that amount is. Now, you
There's
can't.
also another little bonus that we've worked in that I didn't mention. For the first month, the only people allowed in it for the air to get airdrop, you get airdrop points as well from buying FinRev. You also get airdrop points for transferring your balance from FinRev to the new Hyperliquid Vault. So you get double points effectively. And for the first month, we're not allowing anyone in but existing FinRev members, and we're giving um, um, we're giving the first month of points just for FinRev members. So 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 not only so the way it works is, let's say that FinRev has $100 million in it and you have $1 million. uh, for that day, you get 1% of the points that are eligible for that day. So not only do you get your whatever you paid in FinRev back, you get extra points, which convert to extra trend tokens at the token generation event. And I know that's a bit complicated. I just posted the technical documentation in the chat.
Nice, nice. Okay.
And BIS risky. So if I transfer $100,000, will I accrue points towards my airdrop bonus? Yeah, absolutely.
Nice, nice. Okay. So the other question is, can I have my cake and eat it and everything else? I want to keep FinRev. I don't want to put any money in the new vault. I just want to get paid the USDC. Can I have everything? And unfortunately, no, you can't have everything.
Well,
Part of fingers
no,
crossed.
there is a way you can do that. You can game the system with about 15 seconds worth of thought. Here's the 15 seconds worth of thought. Let me do your thinking for you. You can just transfer your account over to you can just transfer your account over to um, to the FINRA vault and then pull it straight out after a day. And that would be that would let you that would let you get your cake and eat it too. But the point of having the airdrop is it's so overly generous that you really do want to be part of it. It's like you can do that if you want. There's nothing stopping you from doing it. The more money you deposit in the vault, the bigger the trend airdrop. Correct. So you get two things. You get, first of all, you get whatever you pay for your systems in FinRev. You get that back. And second, you get extra points and extra airdrop based on how much money you've got in there. As for is Scott going to explain how the airdrop works? Yeah, let me give you my internal documentation. Here we go. This is the internal thing that we built it from. Excuse the comments there. Some of our internal. These are sort of like internal working documents that they're not intended for public consumption, but I just don't want to be hiding anything from you guys. It's all in the chat.
Nice, nice, nice. Okay. So I think that's pretty much all the kind of technical questions that I saw, and hopefully that's cleared up a little bit of confusion. So just a little bit of an admin one then. Current FinRev members, if you look in your FinRev group, there is a featured post that asks you to join the trend update group. And that's full of all the AMAs and all the details. So that really answers a lot of question. And another question that people have been asking me is like, oh, how will I know when to do this? Will you help us? Will you do? For sure we will. Your job right now is to make sure that you're reading Scott's emails every day, to make sure that you've got access to the group and you're checking the FinRev group, and that you've joined the trend update group and that you're checking any updates from there. Anybody that's been with us for more than 5 minutes, they know the standard of the coaches that we use to onboard, and they know the standard of the materials that we use for people that want to self onboard. Now, if I'm right, Scott, when we're on the new Vault on Hyperliquid, things are going to be really easy compared to what it was
Oh
like
yeah.
onboarding with FinRev.
So it sounds strange, but running a mid-frequency system making millions of trades a day is a lot less complicated than FinRev now, because right now we're split up between thousands of different accounts. There's questions about who gets to trade first. Like the guy trading first always has an advantage. So how do we do that? We rotate it. We rotate it randomly, so we don't front run our own. We don't front run each other. We we're on the lowest fee tiers right now. Like we're paying a lot to trade because we're all 2,000 small accounts. One big account, they literally pay us to trade. Um, so there's huge advantages, and it's more secure. It's simplified. It's a much easier technical job than FinRev once we move to Hypertrend. So it's better in every way that matters, basically.
Nice, really nice. Okay. Well, we have taken up a lot of
Yeah,
other
I think
people's
that's 2 minutes.
time.
This is almost 90 minutes, dude. Like yeah, book those calls. I'm excited about this project. It's liquidating my full stack to put into it. Going hard on it. I'm either I'm either going big or going out. It's a ride or die for me. So
Oh, absolutely. I mean, I've been involved in some cool projects, but this is the one that I'm most proud of. Like Hyperliquid, they want to be the DeFi exchange, and we are the first there.
we're also the highest market cap native coin.
Um,
And if you look, if we can see that over 6 months, we can see that Hyperliquid just takes market share off Binance, Bybit, OKX. You know, we can see they're just taking market share off them. You know, if we look at it over the last year, you can see this is a trend that we want. We want to be on. We want to be betting on the growth of the Hyperliquid ecosystem because it's fucking great. It's really good. It's best tech.
absolutely. I'm all in. I mean, if this doesn't work, I'll be selling fried crickets at the market, but
Oh, dude, if this doesn't work, fuck, my butthole's going to be a bit sore.
Well, what a great, well, it's Friday morning for me. Thank you very much, Scott. Thank you for everybody that's in here.
Thank you
Current
for your time,
members,
guys.
any questions, reach out to support. You know how good they are and how quickly they respond, and we can go over anything. Definitely join that trend update group. See the AMAs. There's a video in there where James Hodges, the big quant nerd, goes through various different systems, and he also talks about drawdowns. So anybody that's thinking about drawdowns, watch that video and you'll get more of an understanding about how the new system will not be as violent as FinRev, shall we say. But that's enough from me.
All right. See
Thanks,
you
Scott.
guys.
Thanks, everyone.